everyone. I trust you all are doing good. In the last episode, we highlighted key risks associated with investing in mid-cap and small-cap companies. In this episode, we will ask the fund manager, Mr. Hemant Shah at Seven Islands PMS, how to mitigate risk and how should an investor deal with those risks. So Hemant, can you please tell us how investors should mitigate the risk associated with investing in mid-cap and small-cap companies?
Thank you, Pooja, for having me. I must compliment you that in the last video you mentioned these three types of risks very nicely, that is macro, micro and company specific risk. I personally believe that the biggest risk is not taking one. Right? So risk is an inevitable part of investing and cannot be eliminated. There is no gain if there is no pain. So always remember, someone's gain is someone's loss in this market. One cannot mitigate or avoid risks associated with investing, but can always minimize the risk.
So what are the important points investors should keep in mind while investing in mid-cap and small-cap companies?
So not knowing what the future holds can be really unnerving. Any kind of uncertainty can be hard to deal with. Risks can be converted to opportunities if few following points are kept in mind. So I am dividing in two categories. One, just in general factors, and the category two will be with respect to company specific factors. So let's talk about the general factors first. So do your research before you invest. This is nothing but know what you own. Invest only as per the risk appetite. So investors need to keep in mind the risk reward ratio as well as the risk appetite of the individual investor. And the risk appetite is different for different investors. Diversify your investment portfolio to reduce risk and keep sufficient liquidity in your portfolio. Why liquidity is important? For example, any sudden fall in the market and you have sufficient liquidity to invest in, you can convert that fall by a good buying opportunity. Keep a long-term investment approach. Many a times, the macro risks are transitory in nature. They subside with time and hence keep a long-term view. Review your portfolio performance frequently. So any fundamental developments with respect to your investee companies should be reviewed periodically. Take practical decision and not emotional decision. Usually the decision making process in investing is biased and very difficult to take practical decision. Decisions should be based on well-defined disciplines and should not have any emotional attachment in investing. Consult a financial expert who has knowledge and experience both. At Seven Islands PMS, I am proud to say that we have a cumulative 100 years of experience and we have seen many ups and downs in this market over the last 3 decades. So these are the category one of few factors one should keep in mind. These are general factors, whether you invest in large cap companies or small cap companies or mid cap companies. Now let me come to your specific question with respect to what investors should keep in mind while investing in small cap and mid cap companies. Let me focus on the risk, company specific risk, which you spoke about in the last episode. So with respect to the company specific risk, the investor should check the promoter's background at least for the past 4 or 5 years in terms of the experience and in terms of the execution of the business plans in the past. Promoters' stake in the company is most important. Higher the stake, better for the investors. Check the promoter's pledge share, if at all there is any. Dividend payout ratio is most important. At least check last 4-5 years of dividend history. Liquidity of the stock is important point also, but I think can be neglected if the fundamentals of the company is strong. Deep understanding of the balance sheet is critical. Investors should also focus on the shareholding pattern every quarter. So these are the few points investors should keep in mind before investing in mid-cap and small-cap companies. At Seven Islands, we track more than 1,000 companies, and considering all the above factors plus many more thoroughly, we take the call with respect to investing in the small-cap and mid-cap companies. So these are the points, if the investor keep it in mind, will surely reduce the risk of investing.
Yes. So it should be noted that there are always risks associated with investing, whether one invests in large companies or small companies. However, risk can be minimized if you follow what Mr. Hemant just highlighted. As they say, biggest investment opportunity lies in uncertainty and uncertain times. So never try to time the market. Rather, make timely investment with a long-term view. I hope you find this video informative. Kindly like and subscribe for further updates on capital market. I will see you soon. Bye for now. Dear viewers, kindly note, this video is only for information and knowledge purpose. Thanks for watching.